Before we proceed, I want you guys to completely watch this video and do as instructed for the additional points. Ready? Let's go! Lesson title: Identifying the forms of business organizations, sole proprietorship and partnership. Lesson objectives. At the end of this module, you should be able to 1. Define sole proprietorship and partnership forms of business organizations, and 2. Explain the advantages and disadvantages of sole proprietorship and partnership. Main lesson. In this module, we will focus on sole proprietorship and partnership. Forms of business organization. After deciding to start a business with a particular business to pursue, one of the important issues is the form of business entity that will serve as the vehicle in pursuing the business. There are 4 basic forms of business organization, namely 1. Sole proprietorship. 2. Partnership. 3. Corporation. 4. Cooperative. Sole proprietorship. The simplest form of business and the easiest to register, through the Department of Trade and Industry, DTI. It is owned by an individual who has full control, authority of his own and owns all the assets, as well as personally answers for all liabilities or losses. Advantages. 1. Owners can establish a sole proprietorship instantly, easily and inexpensively. 2. Sole proprietorships carry little, if any, ongoing formalities. 3. A sole proprietor need not pay unemployment tax on himself or herself, although he or she must pay unemployment tax on employees. 4. Owners may freely mix business or personal assets. Disadvantages. 1. Owners are subject to unlimited personal liability for the debts, losses and liabilities of the business. 2. Owners cannot raise capital by selling an interest in the business. 3. Sole proprietorships rarely survive the death or incapacity of their owners and so do not retain value. Remember, 1. One of the great features of a sole proprietorship is the simplicity of formation. 1. Little more than buying and selling goods or services is needed. 1. In fact, no formal filing or event is required to form a sole proprietorship. It is a status that arises automatically from one's business activity. Next is partnership. Partnership consists of 2, who are not husband and wife, or more persons who bind themselves to contribute money, property or industry to a common fund, with the intention of dividing the profits among themselves. A partnership may be general or limited. General partnership. In a general partnership, the partners manage the company and assume responsibility for the partnership's debts and other obligations. 1. Limited partnership. A limited partnership has both general and limited partners. 1. The general partners own and operate the business and assume liability for the partnership, while the limited partners serve as investors only. They have no control over the company and are not subject to the same liabilities as the general partners. Advantages. 1. Capital. Due to the nature of the business, the partners will fund the business with startup capital. 1. This means that the more partners there are, the more money they can put into the business, which will allow better flexibility and more potential for growth. 2. Flexibility. A partnership is generally easier to form, manage and run. 3. Shared responsibility. Partners can share the responsibility of the running of the business. 3. This will allow them to make the most of their abilities. 4. Decision-making. Partners share the decision-making and can help each other out when they need to. 4. More partners means more brains that can be picked for business ideas and for the solving of problems that the business encounters. Disadvantages. 1. Disagreements. One of the most obvious disadvantages of partnership is the danger of disagreements between the partners. 2. Agreement. Because the partnership is jointly run, it is necessary that all the partners agree with things that are being done. 2. This means that in some circumstances there are less freedoms with regards to the management of the business. 3. Liability. Ordinary partnerships are subject to unlimited liability, which means that each of the partners shares the liability and financial risks of the business. 4. Profit sharing. Partners share the profits equally. 4. This can lead to inconsistency where one or more partners aren't putting a fair share of effort into the running or management of the business, but still reaping the rewards. Remember, 1. If you decide to organize your business as a partnership, be sure you draft a partnership agreement that details how business decisions are made, how disputes are resolved, and how to handle a buyout. 1. You'll be glad you have this agreement if for some reason you run into difficulties with one of the partners or if someone wants out of the arrangement. 1. Here are some other issues you'll want the agreement to address. 2. How will the ownership interest be shared? It's not necessary, for example, for two owners to equally share ownership and authority. 3. How will decisions be made? It's a good idea to establish voting rights in case a major disagreement arises. 3. When just two partners own the business 50-50, there's the possibility of a deadlock. 3. To avoid this, some businesses provide in advance for a third partner, a trusted associate who may own only 1% of the business but whose vote can break a tie. 4. When one partner withdraws, how will the purchase price be determined? One possibility is to agree on a neutral third party, such as your banker or accountant, to find an appraiser to determine the price of the partnership interest. If a partner withdraws from the partnership, when will the money be paid? Depending on the partnership agreement, you can agree that the money be paid over 3, 5, or 10 years, with interest. Students, I want you to answer this question for you to have additional points in the next tasks. 1. Compare and contrast the sole proprietorship and partnership. Write your full name in the comments section and your answer to the question mentioned. Thank you so much and hope you enjoy learning. Please subscribe to help our little channel. Thanks.